part of the supply and demand equation. And I look at traditional uses for silver, I see 4 of them. There is jewelry, silverware, coins and collectibles and metals to that end, and photography. And that was basically where we saw silver being utilized. If I fast forward to 2012, look at the list of things that are using silver. Applications are coming online in a very, very accelerated fashion. The industrial applications are huge, and they're growing faster than ever. And if you look at what's available right now, the ultimate reality is we're in a very big global economic slump. But yet the demand for silver is high. And because of that high demand and the small amount of silver used in all of these wonderful things, I typically am not going to see much in the way of fluctuation of that demand. It's almost inelastic. Dell isn't going to stop making computers because the price of silver goes to $100 an ounce. The reality is that demand will continue to rise, and we will continue to use silver. It's in everything we touch. Cell phones, laptops, computers. It's in your iPads, it's in your iPods. All of that technology has silver in it. The clothing we wear now, sports-related clothing, antibacterial properties, it's used around the world in so many things. Now, if I look at demand, basically that's just a chart to show in a pie form where it's going. And that net investment or investment demand for silver makes up about 16% of the overall chart. As you can see, 47% of it is industrial. We're in the worst economic slump, yet the highest demand comes from industry. So what happens to the price of silver when the economic slump ends and we go the other direction? Inelasticity. It's another reason why you should own silver today. And again, highest demand in history, lowest amount of supply. I cannot convey how important that is to see that on the chart crossing over. It is an important part of why you should be owning silver right now. Now, if I look at the type of accounts we have at Guildhall, we have 2 types of accounts, a depository account and a collaterally financed account. I'll quickly run through these, but there are 4 things I want you to consider before you invest. 1, you should have an idea of what the net percentage of your portfolio is that you're going to put into this before you go ahead and blindly do it. You should have no more than 25% and no less than 10%. As an investor, you want to know what the length of time is. Are you here for the short time? Are you here for a long time? Are you here in between? Where are you going? What is your goal? And then you can base that upon what you want to do and how you want to strategically allocate your silver ownership. And of course, is the product on sale? Is, by historical standards, silver cheap? Well, the previous high is $52 an ounce. Right now it's $32. It's on sale. Believe me, it's the right time to own silver. So let's look at depository accounts. And I'll pop up a bunch of points there in the interest of time, and you can take a look at them, and I can review them with anybody after we've completed this process. And essentially, what you have there is all of the accounts starting at 100 ounces or more. It's physical, it's vaulted, it's segregated, it's allocated, and it's audited. It can't get any better than that. Taking it home wouldn't be better than that. You can buy and sell 12 hours a day, 9 in the morning till 9 at night. It's deliverable. The storage is 1.3% of the total metal value on a yearly basis. Commissions start at 5%. There's a $200 account opening fee, which for seminar participants, we always waive as a thank you for coming out, and we're happy to do that. Now, depository accounts are straightforward. What you put in is what you get out. You give us a 100-ounce bar, you give us a 1,000-ounce bar, it's what you take out. Same thing. Now, collaterally financed accounts are something I want to spend a couple of seconds on with you. A collaterally financed account, if you've listened to the show, and how many people have listened to the Real Money Show at one time or another? So everybody's heard about the idea or the concept of collateralized financing. It's the concept of using other people's money to make an investment, similar to a mortgage. I might put up 10, 20, 30, 40% of the value of the home, and I will have my lender or somebody else pay for the balance of that, and I owe it, but over the years, my asset appreciates in value. If I want to add a kitchen to my new house, I can do that. I can get a line of credit. add a new kitchen, finish the basement. That is the same concept that we're using here with collateralized financing. We will allow you as investors to put up as little as 30% of the value of metal you want to invest in and borrow up to 70%. Now, if I look at this, again, I'll bring up a bunch of points to compare with the depository account. And again, you'll see they're very similar. This account starts at 250 ounces. It's physical, it's vaulted, it's segregated, unallocated, pooled, and audited. Slight differences, but again, physical product. When we're buying, we want to take it out of the market, and we don't want anybody else to get it. It's deliverable. The storage rate is slightly less expensive there because we have more product there. Commissions start at 5%, and again, the cost of financing is US Prime plus 5, which right now is 8.25. We will review that with you if you're interested in looking at it to tell you how that can be, impactful for you if you're looking to invest that way. And again, there's a $200 account opening fee. Now, if I take one example for this evening of 1,000 ounces of silver at $34 an ounce, it would cost me $34,000 to buy that 1,000 ounces of silver. For those of you who have never seen a 1,000-ounce bar, here's Skippy, my friend. I don't know Skippy, but he looked pretty good and pretty happy. He's got 10,000 ounces of silver. Those are 1,000-ounce bars. They're enormous. They weigh 65 pounds, and you need a wheelbarrow to take that out of here. It's an incredible picture, and Skippy's very happy because having 10,000 ounces is a great thing. Now, if we collaterally finance that investment, we're going to get 1,000 ounces of silver, $34 an ounce. We're putting up 30% equity. Our total initial outlay for that 1,000 of ounces to own it, control it, it's mine, I get to say what we're going to do with it, is going to be $12,600, roughly, at today's $34 price, roughly. Now, analysts expect, I'm also one of those analysts, that the price of silver could go next year as high as $91 an ounce. So if I have a total initial outlay of $12,600, I own 1,000 ounces, and I put up 30% equity, let's see where that takes us. At $40 an ounce, if silver rises there over the next 12 months, I buy 1,000 ounces, I put up 12,600, I'm going to have a net return of approximately 20%. Not bad for a day's work. I would say, comparatively speaking to what I'm earning in my portfolio right now, it's a really good return. And that is not a very high price. $40 an ounce over the next 12 months, net return of 20%. That means my new value of funds is going to be a little over $15,000. Now, if silver rises to 45 over the next 12 months, my net return is going to be 60%. And the new value of my money is going to be roughly $20,200. Now, if we should be lucky enough to see $50 an ounce, and I believe we will, my net return is going to be about 101% from here today. I buy 1,000 ounces, I lay out $12,500, $12,600. I will get a return on my money. It will now be worth just a little over $25,300 or 101% return. That is a net return based on silver going to $50 over the next 12 months. Now let's go crazy for just 1 second. I don't often do this. I don't want you to think that I'm blowing smoke anywhere. But if it goes to that $91 an ounce, my net return will be 434%. And my new value of funds, I laid out $12,600. It will now be worth a little over $67,200. So all in all, collateralized financing with $12,600 for 1,000 ounces, which is a very common investment, is a very smart way to invest. Now, if I look at the risk quickly, and I can go through this with you anytime, as can any of the brokers, there's my risk. If I start at 30% equity, I put up 30%, I own at day one 1,000 ounces, I have to make sure that my equity never falls below 15%. If it does fall below 15%, then I have to make sure that I'm responding in one of those four ways. I'm not going to be forced to send in money if I don't have it, but you should hold back something for a rainy day. You could reduce your debt. You could pay outstanding debt completely. You're free to come and go as you like. It's completely open-ended if you're using this particular strategy. Or you could sell ounces. You had 1,000 ounces, you sold off 200, you'll buy it back down the road. Those are all options for you. and we will expand on risk at a later point in time. Now, what I just want to convey lastly is that the smartest investors own silver today. And before I pass this over to Lou, I just wanted to show you something that I find interesting and I do with people all the time. We talked a lot about paper money in the last half hour. And if I take a normal $100 bill and I hold it up in the air and I drop it, did anybody hear that land? Maybe the people in the front row. Nobody heard that land. But if I take 100 ounces of silver, which is 6.5 pounds, and I drop it on the floor, that's real money. That's going to protect you going forward. That is going to help you achieve the life outcomes that you're looking to have. And I believe in this day and age, as investors, you have a rare opportunity to jump on board, unlike any other time in history. So if you take that chance, let us help you with that investment. After this show is over tonight, speak with anybody. Take the paperwork that's inside of your portfolios that we gave you, and go ahead and fill it out. Decide what you want to do, how you want to do it, and talk to us about the type of ownership you'd like to consider. We'll be happy to help any of you with questions or to meet at later times if need be. Other than that, I want to thank you once again for coming. I'm going to pass it over to Lou Skizis, and I'm going to have Paul Wiseman speak about natural fancy colored diamonds.
Thank you.
Thank you, Lou. Appreciate it.
Okay, I want everybody to take a 10-minute break, enjoy some of the cocktails and refreshments, and we'll come back. Get up and stretch a little bit. You've been sitting long. You know, as an instructor at Sheridan, I teach for 3 hours, but they're only 50-minute hours because every hour I give people a 10-minute break so they're not falling asleep. So get some coffee, and then in 10 minutes' time, Paul Wiseman will come to give you some information on natural fancy colored diamonds. Thank you very much.